All right, today we're going to focus on a skill that is absolutely critical: assessing trend quality. You see, moving beyond just spotting a trend as a step you just can't skip if you want consistency. We're going to build the discipline to tell the difference between a high probability setup and just market noise. Now, this idea you see here, it's probably one of the most common and, frankly, most dangerous assumptions in trading. I get it. On the surface, it seems to make sense. The price is going up, so of course it should be a buy, right? But that simple view completely ignores the single most important variable: the character of the trend. Let's be crystal clear about this. That assumption is flat out incorrect. Following that idea is a surefire way to get random results, a ton of frustration, and yeah, a blown account. So our job today is to take that belief apart piece by piece and replace it with a solid rule-based filter that actually protects your capital and your sanity. Here's the path we're going to take. First, we'll cover the untradable trend. Then we'll get into defining trend quality. After that is the one-question test, followed by the rejection scale, and we'll finish up with locking in your rule. This is the big idea for today, so really let this sink in. A trend can exist and still be completely untradeable. Just because a stock is technically moving from the bottom left to the top right of your chart, that does not automatically make it an opportunity for you. Look, your job isn't just to identify direction. Any simple moving average can do that for you. Your real function as a thinking trader is to evaluate the quality of that direction. Making this shift is what takes you from hopeful guessing to building an objective, repeatable process. All right, section 2, defining trend quality. If we're going to operate like a system, we need objective ways to tell a high-quality chart from all the noise out there. And that's where the distinction between clean and messy trends comes in. Okay, so this slide lays out the visual cues you need. On the left, you've got a tradable, clean uptrend. See how obvious the higher highs and higher lows are? The pullbacks are orderly. But on the right, that's a non-tradable, messy trend. It's choppy, it's erratic. Those deep, violent pullbacks and all that candle overlap, that's a sign that nobody is in clear control. So why are we so obsessed with avoiding these messy charts? Well, it's simple. They are capital-destroying environments. That chaotic price action is almost designed to hit your stop loss. This constant back and forth whipping action, it just leads to fear, frustration, and emotional decisions, which completely wrecks any logical plan you started with. So how do you actually make this distinction in real time without getting paralyzed by analysis? You use a simple, non-negotiable filter. This is going to be your primary tool for classifying every single chart you look at from now on. This is it. This is the one question you have to ask yourself, honestly, for every single chart. Would I be comfortable putting my real money here with a clearly defined stop loss? Notice the question isn't, do I think this can go up? It's, is this structure clean enough for me to define my risk and feel confident in the setup? This question cuts right through all the noise and ambiguity. And the process for this? It's systematic, it's repeatable. 1, open your daily chart. 2, just briefly see if there's even a higher high, higher low sequence. And 3, immediately ask the one question. This whole thing should take seconds, literally, not minutes. Your answer has to be one of these 3 and only these 3. Clean trend, messy trend, or no trend. There are no maybes. There are no borderline cases. There is no, well, if it just does this one thing. Listen, if you have to pause, if you have to hesitate, if you have to try and convince yourself, the answer is automatically messy or no trend, period. This brings us to a really important shift in how you should see your job as a trader. You are not a stock picker. Your primary job is to be an aggressive filter. Your main goal is to protect your capital by rejecting low probability charts, not to try and find every possible winner. So your task today is not to go hunting for entries, not at all. It's to practice the skill of rejection. The whole point is to train your eye to demand absolute, undeniable clarity from a chart before you even consider it for anything else. And to build this skill, you've got to follow these rules. These are non-negotiable. Don't mark up potential entries. Don't you dare use indicators to try and justify a messy chart. And don't get excited about a company's story. Just remember, your skill at rejecting bad charts is far more valuable than your skill at picking good ones. Here's the final check. Use this as your go-to mental rule. If you ever find yourself zooming in, squinting, or trying to talk yourself into seeing a clean trend, the decision has already been made for you. It's an automatic rejection. Clarity doesn't need convincing.
Okay, but none of this analysis means anything if it's just a one-time exercise. The whole point is to turn this process into a permanent, unbreakable rule that's baked right into your trading system.
This is the rule. I mean it. You need to physically write this down. If the trend is not visually clean, I do not trade, regardless of opportunity. That means even if a stock has great news, even if you think it's a bargain, even if everyone on Twitter is buying it, if the chart structure isn't clean, you stay away. And I want you to understand something. Your strict, unwavering discipline to this one sentence will have a bigger impact on your long-term success than any single pattern, indicator, or entry signal you will ever learn. This rule, this is the bedrock of discipline. Okay, so let's wrap this up with the key takeaways. First, not all trends are treatable. Second, trend quality is always, always more important than trend direction. Third, use that one question test as your main filter. Fourth, actively work on building your rejection skill. And finally, you have to codify this into a written, non-negotiable rule. I'll leave you with this question to think about. If your objective is not to find every single winning trade out there, then what is your primary objective as a systematic trader? The answer to that question is rooted in risk management and protecting your capital. And that all starts with the discipline we've covered today.